Imagine a moment. You stand at a checkout counter or stare at a payment screen. Two options blink back at you, debit or credit. It's a tiny decision, but it ripples. One choice protects today's cash and keeps you out of debt. The other builds a reputation the lending world reads, your credit history, and opens doors to lower interest rates, larger loans, and financial options. Which do you pick and why? What each payment type does, the invisible signals each sends to lenders, and the rules of responsible use that let you harness the advantages of credit while staying firmly out of debt. What debit really is, the cash equivalent. Debit cards draw money directly from your checking account. When you swipe or tap, funds leave your balance. The instant clarity is powerful. You can't spend what you don't have unless an overdraft program kicks in. For people who struggle with impulse spending, debit is a blunt instrument of discipline. Practical, concrete reasons to prefer debit in certain moments. No interest charges, because there is no borrowed money. Immediate visibility. Your bank balance reflects purchases in real time, making budgeting simpler. Lower temptation. Psychologically, you're more likely to limit discretionary purchases when you see your balance drop. Good for small, everyday purchases where rewards and dispute protections are less critical. But debit has trade-offs you must understand. It usually does not build credit. Debit card activity isn't reported to the major credit bureaus as on-time payments, so it won't improve your credit score. Fraud and recovery can be slower. Because debit pulls from your cash, unauthorized transactions temporarily reduce your available funds. While many banks offer fraud protections, the process to recover cash can take longer than credit card dispute processes. During that recovery window, you may face bounced checks or lost purchasing power, overdraft fees, and limited consumer protections in some cases. If you aren't careful, small mistakes become expensive. Use debit when you want tight control, when the purchase is small and routine, or when you absolutely cannot carry credit balances without falling into debt. What credit really is: borrowing with signals. A credit card is a promise. The issuer pays now, you repay later. That borrowed money creates two powerful systems: a borrowing mechanism. If you carry balances, you pay interest. A credit reporting mechanism. The issuer reports your payment history, balances, and account age to credit bureaus. This reporting builds your credit profile, the story lenders read when you apply for a loan. Why credit matters beyond rewards. Payment history is the single largest scoring factor. Consistent, on-time payments build trust and increase your score over time. Credit utilization, the share of revolving credit you're using, is a major lever. Keeping utilization below 10 to 30% of available credit is a widely recommended target to maximize scoring impact. Account age and credit mix also matter. Responsibly used credit creates a mixed, mature profile lenders like. Credit gives you legal protections and conveniences that debit often does not. Purchase disputes and chargebacks. With credit, you can dispute a merchant and withhold payment during the dispute process, protecting both cash flow and consumer rights. Fraud protections. Many issuers offer zero liability policies for unauthorized charges and remove disputed amounts quickly from your balance while they investigate. Rewards, purchase protection, and extended warranties. These benefits can effectively lower your net cost on purchases and deliver value debit won't provide. But credit brings the risk of interest and long-term cost if misused. A single unpaid month can generate interest that outstrips any rewards you earned. That's why the card use rules matter. The golden rules of credit use to avoid debt. If you're going to use credit, do it like a professional. Here's the ironclad playbook. Always aim to pay in full each month. Interest is the enemy of any reward or convenience. If you never pay interest, you harness credit's benefits without debt's cost. Keep utilization low. That means keeping balances under 10 to 30% of your total available credit on reporting dates. Less than 10% is ideal for aggressive score gains. Use one primary rewards card and one backup. Simplify your payments to reduce missed payments. Schedule autopay for at least the minimum. Plan to pay the full balance. Autopay is the safety net that prevents accidental interest. Avoid cash advances and convenience checks. They often carry immediate fees and higher APRs. When used this way, credit becomes a tool. It builds your reputation without adding cost. When debit wins, practical scenarios. Use debit when you're paying for groceries, coffee, or low-value daily expenses, and you want to avoid temptation. You're on a tight budget, and any borrowed money would be risky. You need instant balance visibility to prevent bounced payments or overdraft fees. You're making ATM withdrawals. Debit is the natural choice. When credit wins, practical scenarios. Use credit when you're shopping online or using a merchant you haven't used before. The dispute and fraud protections offer a safety net. You want purchase protection, loss/damage, or extended warranties. Credit cards often extend manufacturer warranties or cover losses. You're earning rewards on planned spending, you'll pay off anyway. You need short-term float between purchase and payday, but only if you can absolutely pay the balance in full. The hybrid strategy. Best of both worlds. You don't have to pick one lane forever. Many successful money managers use a hybrid approach. Primary budget on debit. Day-to-day small purchases live on debit for discipline. Planned purchases on credit. Bills, large purchases, travel, and online shopping go on credit to capture protections and rewards. A credit-building plan? Use one low-limit card for recurring subscriptions or a small, manageable monthly charge and pay it in full. This builds payment history without risk. Emergency reserve. Keep a credit card reserved for true emergencies only and replenish your savings to avoid using it. This blending keeps you debt-averse while harvesting credit's structural benefits. Real-world psychology. Why people slip. Understanding behavior is crucial. Credit temptation is real. A high limit feels like extra cash. The antidote is designing friction. Use debit for impulse purchases and require a short waiting period before using credit for discretionary items. Set rules. No credit for clothes until 48-hour consideration. These rules reduce regret spending. How credit builds. Over time, and why it's worth the effort. Credit is not magic, it's a record. The major components you directly control are payment history. Make payments on time. That single habit produces the most scoring lift over time. Amounts owed, utilization. Low balances relative to limits produce measurable score gains. Length of credit history. Older accounts help. Keep fee-free accounts open where practical. Credit mix. A healthy combination of revolving accounts and installment loans helps, but only if responsibly managed. New credit inquiries. Minimize these around important loan events. Concrete tactics to build credit without debt. Set a recurring small charge on a single card, a subscription, or a small utility, and pay it in full. This creates a reliable reporting item. Consistent, documented on-time payments. Use a secured card if you have no history. Deposit cash as collateral, use the card for small charges, and pay in full. Many secured cards report to bureaus and graduate to unsecured if you show responsible use. Become an authorized user on a trusted person's account with a long, clean history. You can inherit age and positive history. Use this ethically and only with people you trust. Ask for small credit line increases after months of perfect payments. More available credit lowers utilization without new accounts. Practical playbook. Use debit for impulse spending to enforce discipline. If you need to build credit from zero, use a secured card or become an authorized user. WiseConsultant.com helps clients understand how to apply these rules to their unique situations, which card to use when, and how to build credit while staying debt-free. If you want confident decision-making, follow the playbook above. Keep the discipline, and let small, consistent actions rewrite your financial future. If you liked this guide, subscribe to the channel for weekly tactical lessons on credit and personal finance. Use the rules you learned tonight. Pick your payment option with intention, not habit, and watch your financial options grow. Wise Consulting Enterprise. We could help you in such.